Hello, everybody, and welcome to a bonus edition of the Plus3 Futures and Commodities Show. My name is Ben Maldonado, and I am here with my partner, Barry Hederachi. Hey, Barry.
Hey, Ben. How you doing?
Hey, Barry's a little somber because what we have to talk about today is really interesting, and the ramifications are potentially huge. What we want to do is we want to share sort of the story that a couple of charts are telling us. They're individual stocks. We normally don't cover individual stocks, but there's been a lot of sort of buzz on Twitter and in the financial press about what's going on with some companies that should be doing very, very well, and the charts are telling a completely different story. The first one is the chart you're looking at here is a chart of Pfizer. Now, what is most interesting about the chart is in the middle of the pandemic in December, when Omicron was raging, Pfizer topped out. And since that, on a full square, where we put our geometry on, everybody that watches our video knows we use these squares to frame price action and tell us, areas where one thing's more probable to happen than another. Well, we topped out here on a full square. And since that time in December, we've just been really, really weak. And this is during a time where there's talk of annual vaccine boosters, other vaccines they're developing for the different variants. This stock should be doing very well. It should be doing this: higher highs, higher lows, holding support, moving higher. But we're doing the exact opposite. We're making series of lower highs. Couldn't hold this full square. Couldn't hold this full square. Got below, held this square, went up and tested here, lost it again. And we keep just ratcheting down and ratcheting down. Barry's going to go through in a little more detail, what he's seeing. But from just a macro view, the chart is telling me something's wrong with their business. Something's going on. I have no idea what it is. I'm not a fundamental analyst, so I don't know what the ins and outs of their company. But the chart is telling a story that something's wrong. Let's look at the other one we want to talk about today, Moderna. Again, this is a company that has a solution for the COVID virus, and yet it topped in August on a full square, by the way, squaring out price and time, which is always nice when you get both of those. And we've been coming down and making a series of lower highs and lower lows and failing every time we had support. Support there, failed. Support held here for a little while, failed. Back up again, tested, failed, failed. Came down here, tested, failed. We're on this level of support here. If we lose this, this is a chart that's acting like, last person out of the office turned the lights off. I mean, there's no other way to describe it. There's something seriously wrong with their business based upon what this chart is telling us. And this support area here, you can see on the way up, there was a lot of activity here. If we lose that, it's not good. I know you and I have been having some conversations for the last couple of days, Barry, because we just sort of jumped into this middle to late this week in sort of doing the analysis on this. And the story is not a good one for the bulls. What are you seeing? And let's go through. Let me flip it over to you, Barry, and then you walk us through your charts and we can discuss, what story you're getting from your charts and what the potential ramifications are going forward.
All right. Can you see that?
I sure do. You know what that chart looks like?
Bitcoin?
No, I was going to say, yeah, Bitcoin it looks like the euphoric and mania type stock trend that they show.
Yeah.
You know, the pattern that it takes. That's the
Like the
exact
bubble,
same pattern.
the bubble charts.
Yeah, right. The bubble charts and the bubble path. Yep,
Mhm.
that's what it looks like.
And that's what it was, right? Clearly, it was a bubble going into that.
Holy moly!
And
But
the
remember,
reason I'm
the
go ahead.
bubble. The scary thing, Barry, is the bubbles go back to where they started.
Mm-hmm. Yeah.
That's the pattern.
Yeah. Well, we should have caught this a little earlier, but we.
If we only watched individual stocks, right?
Yeah, that's the thing. We don't really watch stocks that much, and unless something comes up in the conversation, and I guess that's the reason I'm somber today. Is you talked me into looking at charts today. So, all right, fine, because you got a day off tomorrow, right? So,
Right.
we can work that out. Well, after you mentioned it, we both, I think yesterday, Friday,
Something like that a few days ago. Yeah.
we talked about this and how the stocks are just not looking like they're in the middle of their season.
Mhm.
It's a pandemic, and these guys have the vaccine, and I wouldn't expect it to have these kind of huge corrections in the middle of it. So anyway, we wanted to see if there were actual cycles that expired up here, if everything's behaving normally, and what we might be able to expect. And looking into that, so this is a weekly chart, and
Look at that timing.
Yeah, timing was there. We're 142 squares out, weekly chart. It's perfect.
So essentially a 2-year cycle there.
Yes. Yeah,
Mhm.
exactly.
Mhm.
Almost as if it was planned, but
That's another video.
That's another video. But it's very clean. We got 1/3, 2 1/3 in price, and exactly 2 in time. So that that kept the high, and the fact that we failed. I mean, it was a beautiful setup, right? We had the high come in. Here's the first counter trend, and wham, failing that just opened up the whole downside. So I'm looking at the weekly. Normally I look at it, see, well, what do the long-term cycles look like? And the squares really hold up okay. Well, on the way up, we can see the 50% of the first square performed fairly well.
Very
We
well,
held
yeah.
that. And the cycle's looking back now, we're a little bit behind the ball here, but we're okay. We're there. Now, coming back, we've also corrected exactly half a year.
Mhm.
And that's something to notice. So it's kind of timely. I wouldn't say we're completely off time, right? We're
Right.
okay. And the reason why it's a good spot to check or good time window is because we're exactly half a square down. And if we're going to correct this is the place to correct it. Like we had the low come in plus or minus 1 or 2 bars on either side. So now this is at a critical spot in time. We had a 6-month correction, basically. Square wise, everything looks okay. Everything's normal. We had a cycle up, square it out, corrected nicely. And now we're in a sort of a time window for the correction to be finished. I wanted to go back to the daily and take a look. So just coming up from last year's low, we were up, 2 years, like you said, 720 degrees up.
Yep, 2 years. Yep.
2 years. And it's interesting how it squared out from a number of places, right? It squared out from the low in August. Now I'm looking at the counter trend high, the lower high to be the square here. Sometimes what happens in the cycle, it shifts. So either that or this was sort of a false high.
Mhm. False
what
break.
I used to call a ghost high,
Mhm.
a ghost bar, and all the cycles line up to the lower high, and that happens sometimes. So once you catch it, it's in there, it's working. And the way you can tell is if you go to other lows, you can see it also squares out perfectly. It's 180 by 180 right at that low. So this was some kind of a completely artificial sort of pump and dump kind of a move, or something, whatever that was. Everything, all the cycles are keying off of that high, lower high. And and when you have these, you want to take a closer look to see if it was all proper. This looks all proper. It looks like everything worked out by the book. So the highs are okay. Highs seem legit. Now, now we're coming off the high. We're 180 degrees down, exactly where we are now. This is why I said, on the weekly chart, we're down 6 months, and in price, we're 180 degrees down in square of 90, basis 90. So this is a critical spot. And the whole idea of looking at all of this was to figure out, what could happen next, and is there some opportunity here? Now, what Ben brought up was, look, this stock shouldn't be doing this badly, if they have the number one vaccine, which is true. And I said, well, that's true. It's like having a drought and then you're selling water and your stock is not doing that well. Right. Something's up. What's going on here? So we don't know, fundamental stuff. So let's take a look at the chart. All I can say is we're at support now. So going forward, I would say the key thing to watch would be any rallies failing around $180 to $190. This is major resistance now. And if we fail here, potentially that really opens up everything below $130. And looking to the downside support levels, the biggest one from here would be around $89. So there's about a $10 zone here, $100 to $90 to $100 right there. And that's sort of the zone. And where we're going to lay this out is, if we're going to rally off of this, if we do that, then the level to clear would be the $180. And if we can get above it and stay above like we normally talk about, then we ought to probably go up and maybe test the highs. Failing to do that, first support would be around $89. And if we fail there, the next support is really around $30, and then maybe even $12. And that comes out, some support here, we're 180 degrees down, half a square down is about 40. And if we lose that, clearly we don't have room to go to 270, because that will be
negative 45.
That'll be bankrupt.
Right.
Which, hey, it could happen. Who knows? But other than that, the low end would be really around $30, $40 would be the next major support. So the basic scenario is to watch if 180 can be taken out on the way, on a bounce from here. If it doesn't, I would think that would be a good place to sell it, and expecting it to go down to about 90. And then from there, if it fails 130 on a rally, then it should get down to, this $29, $30, $40 range, which is about the half square. So that's the sort of the map.
Barry, we were both around in 2000, and the pattern is so similar. Go back and look at some of the .com stocks from 2000. It's a similar pattern.
Yes.
And they're not the Amazons of the world either. Not Amazon. Look at the ones that are no longer around, and this is the pattern.
Yep.
So we know the levels to watch. The pattern is speaking of major issues with their business. I have no idea what it is, but that's what the pattern is talking about.
Yeah, certainly in the middle of the pandemic, we shouldn't be they shouldn't be selling off like this. So, okay, fine. So they did. Again, now we're at very clear support, and we sort of have a game plan to watch to see what happens, mostly out of curiosity, really. So those are the couple of levels to watch. And do you have anything to add to that?
No, I think it's a good coverage on it. Let's look at Pfizer real quick, and then we can talk about the cycles that are coming up. That
I also had some levels based on the weekly. So that just comes down. Well, earlier I had about 90, 90 to 89 to 100. So here is 106. And then we have a little bit around 69. And then that's really about it. So I would disregard these. But the interesting thing here is we also have 183 as an upside resistance and 205 basis the weekly. So again, I would look at that to be more important than the downside.
Because if it fails, the downside will get going.
Yeah, downside. Yeah, I mean, look at where we are, right? So we're really going for a flush here if we got to lose these levels, especially since we're at 180 and squaring out at 135. So that's that. So let's move on to Pfizer. Let's see what's happening there.
Pfizer were catching a little earlier in the downdraft, it looks like to me.
All right. So again, this is the weekly chart, and I don't want to go through every high and low from history, but just to go to the last low. Pfizer, very much like what happened to what we saw in the other chart.
Moderna, yep.
Moderna. So it squared out perfectly.
With time.
I mean, low to high 90. I wish we were watching these. Really, we should have. Actually, we should probably start watching some stocks. So we're 90 by 270. Beautiful, beautiful. And we're not talking days. These are weeks. So these are big cycles. When 90 weeks hits, so this is the kind of results. Very fast action. You don't have to sit around and wonder what's going to happen. Now, normally what could happen is we ought to probably hold at a half square or a full square. The issue here is, again, we're in the middle of their, quote unquote, their season, and, the market's selling off really hard. So, and we took out the first, we took out a hard, very important support level. And well, that brings up some questions. And, on a weekly basis, we haven't even had a counter trend. It's just been, down a week over week.
Down. Yep.
Straight down. So, and if you look
looks
at
like
history,
you had
Pfizer,
one inside week, it looks like you had. That's about it.
Yeah, and the rest are just down. So, counter trend would be the thing we'd like to see at this point. And on a daily basis, it would be easier, I think. So far as cycles go, we were 450 degrees from last March, and we have a 90 high to high 90 and a 45 low to high. So these are really important cycles, and when they come in, there's really
it's all converging too.
They all converge and they all expire together. We talked about levels, so let's take a look at the game plan here and see what might be happening. So Pfizer, regardless of what happens to the upside, I don't think we're ready to move higher. So it looks like it's going to go up around 45 and look for support. So the first target downside for Pfizer would be 45. And if 45 goes, it'll be around 35 is the next level. And then 29. And if 29 goes, we have $22. Not bearish at all there, Ben. Well, if we're going to work out levels, might as well just work them out. You don't have
to
keep going back to it. So those are the levels. To play it, I think the way we do it with levels would be to look at, 51. Let's say 51 to be resistance at this point. And if any counter trend can't really get a hold above 51, then I would expect it to go down into 45. We might go down into 45 as it is. Mm-hmm. But that's the next big level to watch. And if we get below 45, these levels you have to play it in a way where if we break these, they become very good resistance. So those are, so if we get below 45, any resistance, any retest of 45 is expected to fail. And the next big level would be this 34 area. Going on to a daily chart, let's see. So Ben, this is what I was talking about. If it was a normal sort of a bear, a correction, it ought to hold above at least a half a square.
Right.
At the 50% level and then try to mount a rally. Here, there's no, not even we held a couple of times, but not much power coming off. We're trying to get out of it. So slip right through. To me, so this 51 area is now resistance. It shows up here as well, right there. And the next big support complete in the cycle will be right around 39. And so that's what we're watching next. Want to add anything to that?
Just that I think it's good coverage and good levels. You see this type of price action and you wonder what's happening. But the bigger thing is how do you find the spots where there's a good risk reward to figure out what's happening? Because by the time it's out, it'll be too late. So you have to use the
kind of news. Yeah.
Right. If it's news related, forget it. If it's, a fundamental issue with their business, that's going to get out and the stock's going to be much lower. So the other thing I'd add is that, I'm sort of on the record as saying that, based on the cycle work I do, the next crisis starts in March. I don't know what it's going to be. I have no idea. Could it be something that's related to these two stocks' business? Absolutely. Could it be Fed related? Could it be war, the Ukraine? Could it be something with China? Who knows? But there is the timing of their sort of acceleration to the downside is really, really ominous, given the cycle work that I'm doing and what's happening in March. I think we watch the levels. If it can't even get a counter trend and starts taking out support, I think it's look out below, because it would just point towards a higher probability that maybe the cycle, the next crisis that the cycles are talking about has something to do with these guys.
Right. So anyway, so 51, 52 is the level if we indeed get a little bit of a counter trend, which is not much, a couple $3. So we ought to be able to, maybe muster that. The other thing, Ben, that's interesting is we're, coming into next week, we're 45 from the high and 90 low to low. So there's a good chance to mount a new, sort of a counter trend or a continuation of the trend in this window.
That's right.
The thing to remember is if that kind of cycle where it's low to low is 90, we have a 45 high to low and low to low 90 cycle, and we can't get above 51, that's a signal. It's really weak. So that's the thing I'll be watching.
Excellent. Well, let us know by liking the videos or ringing the bell or whatever YouTube asks you to do. Let us know if you like these kind of videos, and maybe we'll do more of these short sort of bulletin hits, if you will. Let's see how it plays out.
Thanks, Ben.
All right. Take care, Barry.
All right. Bye.
See you.